Hello, traders. The theme today is What Now? The market's already fallen so far. How can I possibly feel good about shorting it here? I feel like I'm chasing if I enter short positions. I'm going to address that dilemma through the course of this video. But before I do that, I'd like to go back and review my previous picks. Hey, I've been doing more videos because you guys have been giving me lots of thumbs up. I've got a lot of subscribers coming into the channel. It's elevating my visibility. I appreciate it. Thank you so much. I'm just trying to reach as many traders as I can. These are all free videos, and I'm trying to teach you a systematic trading approach. I'm not just giving you picks, I'm telling you why the pick makes sense, and I'm going through the whole process starting with market analysis. That's why these picks are so dang good. So, a week ago, I gave you Starbucks. Starbucks was beautiful. Stock was selling off. Market was showing signs of weakness. What happened Monday? The gray line is the SPY. The market gapped up and it rallied all the way up to the 200-day moving average. I liked Starbucks short. So you can see how the stock gapped up with the market and it instantly crumbled, meaning this was a little head fake move because sell, 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 sell. There were sellers still looking to unload the stock. That is what we call relative weakness. That is one of the pillars for the trading strategy that I teach you. As the market flatlined the rest of the day, so we get this early pop up, and we had about an hour's worth of rally after that, and then the market just flatlined. We'll talk about that later, but that is a very wimpy move. There are no teeth behind it. And what did Starbucks do? It continued to drift lower and lower. It made a new low of the day. You can see it tested VWAP a couple of times, couldn't even get above VWAP. Excellent short. And then it starts leaking oil. The next day, you get the market opening and trying the upside. Starbucks, same pattern. Tries to rally early out of the gate and gets slapped down immediately with nice continuation on the downside. Wednesday, I gave you a pick. It was MRVL. Let's take a look at that pick. Let's go back to Wednesday's price action. Right about in here is where I did the video an hour after the open. You can see the stock was at about $68, fell below $62. Folks, that's a 10% move in the underlying stock in 2 days. Lots of money to be made there. And you can see how weak the stock was relative to the market. Then on Friday, I thought, hey, everybody's been giving me so many thumbs up. I'm going to try and get a video out. It's not great timing for me, but I'm going to put one out anyway. Google was your pick. That pick hit right around in here is where I recorded the video as the market was just starting to break down. And I told you why I felt the market was going to sell off. We had a doji on Thursday, no bounce at all. Sellers were in control and they took control of Google. That stock dropped at least $5 during the course of the day. And at the money, April normal expiration option, probably up 40 to 50% very easily. Awesome trade. Look at how steady the selling pressure in Google was all day long. I hope you guys caught some of these trades because they've been excellent. So let's take a little step back and let's take a look at what the market is doing, and let's take a look at the mentality that we should be approaching our trading with right now. So there you can see that's the 5-minute action on Friday. Market has this steep, swift sell-off. I had mentioned this in Friday's video. Please watch it. After a big steep drop like this, we can expect a bounce. I had mentioned to you that oftentimes we will get a bounce up and even poke through VWAP very briefly, and that'll attract some dip buyers, and then blam, that thing gets smashed right down. It's whack-a-mole. But this time I had mentioned, I don't think we're going to get a very tall bounce. How did I know that? Because the selling pressure here was heavy. That tells me sellers are aggressive. And buyers are not going to come in and aggressively buy stocks when they see this type of selling pressure. So any bounce is going to be brief and shallow because buyers are not that aggressive, but sellers are. And we would probably fall short of VWAP before the market rolled over. This was your entry point right here for Google. Again, please go back and watch that video from Friday. I outlined this specifically. So when the market can't get back up to VWAP and it starts to roll over right in here, 1140 was the timeline. 1140 is right in here. You can see the stock is at 159 roughly, and it closes somewhere around, let's say 156. That's a really nice day trade. So zoom out a little bit, take a look at that D1 chart, and here's the problem that many of you are going to have. First of all, whenever you're trading, you need to determine what your time horizon is. Okay, if I'm day trading, my time horizon is a matter of hours. I'm in and I'm out that day. If you're swing trading, what's my trade duration? Am I looking to enter trades that I'm going to hang on to for 1 or 2 days? Or am I looking to swing trade for perhaps 2 or 3 weeks out? Maybe I'm even looking a month or 2 out. Well, the longer my trade duration is, the more flexible I need to be short term. I need to give that trade some room to move around. I can't strangle it because I'm not looking for a little mini instant move today or tomorrow. I'm looking for a longer term move. And a lot of times traders will think, oh, I'm bearish and I'm going to be bearish for the next 2 or 3 months. And this thing is going to hell in a handbasket. And then the first little bounce, they get freaked out and they bail on the position. What happened to that longer term perspective? You just threw it right out the window. So if you're trading with a 2 or 3 month trade duration and a 2 or 3 month perspective, then what happens intraday is all noise, and you have to look at where the market closed. So on a longer term perspective, you see this big drop. We were looking for this big drop, but we needed to see it first. We don't guess that the market is topping out. We need technical confirmation, because if you go picking market tops, you'll be carried out in a body bag. You're going to lose a lot of money because a lot of these dips, they reverse and they look real nasty, and then they stage the next leg higher because these shorts right here get flushed out. This time was different because we were already seeing many signs of resistance. The dips were more frequent, the dips were deeper, the dips lasted longer. So we have an inkling that yes, the market looks like it's topping out, but until we see this 10% drop in a matter of a couple of weeks, we really didn't know how aggressive sellers were and how interested buyers would be. Now we know. Now we know for sure. Did we catch this move? You betcha we did. We day traded it. We stayed very short term because we didn't want to get caught in a snapback rally like this if the market still had some upside to it. Same thing here. Sure. Favoring the short side, all in here. Oh, here we go. There's a bounce. Now I'm out of my short positions and I'm waiting for this confirmation. In here, we were looking for a wimpy little bounce. So this alone is not quite enough for us to aggressively get short on a swing trading basis with a longer trade duration, because the bounce, the height and duration of this bounce is going to tell us once again, where are the sellers? How aggressive are the buyers? And if this move has mixed overlapping candles and light volume, mixed overlapping candles, light volume, which it did, that sellers are still nearby because they're keeping a lid on that bounce. So we poke above the 200-day moving average. Okay, could we possibly get back to 585? We could, and the context of a bearish market and sellers being in control would still work at 585, but we want to really, really work hard and struggle to get back to that level. And then you'll get a nice crackdown. When you can't even get back to that halfway point, we barely got above the 200-day moving average, and then wham, they absolutely nailed the market. Then we know for sure that we've got another leg lower coming. This is what we've been waiting for. We have been waiting for this since December. And that's what you have to do as a swing trader, is you have to wait for your windows of opportunity, because when they present themselves, we were aggressively short here, we were aggressively short here, we were trading larger size because our confidence is much, much higher now, because we can see that one side is motivated, very motivated to reduce risk. They do not like what they see. And when you have one side that's motivated like this, it's much easier for us to predict future price movement. And that's how we get paid. We have to predict future price movement. Now we've got everything that we need. So you can see, there's your flagpole, there's your little bounce. This is a bearish flag formation. So the dilemma for most people is, hey, after big selling like this, there's going to be a bounce. So, longer term perspective, you want to erase that from your mind, because you've entered nice bearish short positions here. You added to nice short positions here on that confirmation, this little upward sloping trend line here that we call a low plus, breached with ease, heavy selling pressure, market ticking lower all day long. Fantastic. Your mindset is not, gee, I gotta lock in profits on my swing positions right now because the market could bounce. The market's going down, okay? The market is going down. And so if you're gonna get cute and you're gonna exit your bearish swing positions because the market looks a little bit oversold to me, what you're going to miss is the next leg lower. And with a great degree of certainty, I can tell you that the market is going to test this pink line, this low, which is around 550, let's call it. It is going to test this low before it tests the 200-day moving average. I can promise you that. I can see how aggressive sellers are. So armed with that information, if there's a little bounce in here that I'm trying to get cute with and time myself, what's going to happen is you're going to get a little retracement into this long red bar, and then the bottom's going to fall out, and you're going to go, crap, I didn't have time to put my position back on. Because you got cute. You overthought this. And so your mentality here should be, I am going to add to my bearish swing position if I get a little bounce. Please give me a little bounce. Just a little one. It doesn't have to be big. Just a nice little entry point, because when that little bounce gets hammered down again and they play whack-a-mole with it, that's going to confirm just how aggressive sellers are, and that's going to present me with another good entry point for a short position. How can I be so confident? I've shown you all the evidence I have technically that sellers are in control. This is all about your odds. And what are the odds of testing this pink line here before we bounce? Very, very good. Very high. I'm going to tell you it's probably in the 90 percentile. Is it going to happen Monday? I don't know. Usually after a big down day like this, you are going to have a day of rest. That does not mean a bounce. You're going to have a day of rest. Just like this doji here. They tried to rally into this red candle. They tried to rally into that red candle. Couldn't do it. market actually closed on the low of that long red candle. That's why I did my video on Friday morning. I sensed there's another really great shorting opportunity coming up. It played out, so you traded aggressively. Everything is set up. There are going to be months where you could go through price action like this that's dumpy and crappy, and you don't have anything you can really sink your teeth into. And if you try to, you're going to piss away your capital because you don't have the odds on your side. But when you wait and you wait and you wait for an opportunity like this, and you finally get the patterns that you need, you are super aggressive with it, and you are confident that the market's going down because you know that one side is super motivated. So you stick with the position. And now, instead of looking at getting cute and I'm going to take my profits on my short positions, your mentality is, no, I'm going to add to my short positions on the notion that this support is going to be tested. And when that support fails with ease, not a gradual drift lower, not a little wimpy move lower on light volume, not poke at that horizontal support. No. Day or two of rest, blam, right through it. That's the kind of price action that tells us sellers are super motivated. That's the kind of price action I believe we're going to see. Lots of economic releases this week. So let me talk a little bit about that. What are the economic releases going to look like? I think ISM services, it popped up last month. It could be pretty decent. ISM manufacturing will probably be a little bit soft. The jobs reports, I think, are actually going to be pretty good because initial jobless claims have been pretty decent. ADP, that actually could be a little bit soft because we've seen layoffs already coming from corporations. So those are the major news items this week. A lot of economic data points, but the overall problem with the market right now is we've got the Trump reciprocal tariffs going into effect on Tuesday. That's going to spook a lot of people. So that's a potential negative, partially probably priced in right now. But the big problem and the reason that the market is selling off right now, it's not the tariffs. I know that's getting the blame. Certainly there's some uncertainty associated with it, but the problem is global economic growth has been deteriorating in Europe and Asia for about the last year and a half. It's been super stale, very dull, and that that now is starting to come into the US, and we're seeing signs of it. We're seeing very weak consumer confidence, consumer sentiment numbers. That is bearing out in retail sales. You're seeing a lot of retailers who are reducing their forecasts. Lululemon, we're going to take a look at that on Friday. Really good growth, really good number, but their forecast was very light. They reduced their expectations for 2025, and that weighed on the stock. It's not just Lululemon. We're seeing that stock after stock after stock. And we've got earnings season coming up in about 2 weeks. It's going to start. And so we'll see what the banks have to say because they're first on the docket here. They're going to be the first ones dominating the earnings scene. And we'll see what their outlook is for the economy. I can tell you that consumer credit delinquencies have been steadily on the rise. So back to the market. Yes, we could have a little bit of a bounce this week, perhaps better than feared, little temporary bounce, but that is an opportunity for longer term bearish swing traders to add to the position, not to get cute and take some of their position off. The other nice thing is that if you shorted here and you added here, your average cost is still way up here. Let's say just for SPY, you're still up around the 570, 568 level. So your average cost is way the heck up here. You get a meager, wimpy little bounce. It starts to roll over. You're adding again. Your average cost is always much higher than where the current market is. And that's where your confidence comes to build a position. Because what's the worst thing that can happen? you get a market bounce and you stop yourself out at your average cost, which is much higher. So that little safety net thought in your mind is what allows you to do what you really should be doing, which is to add to position, knowing that the overall market looks very bearish in here. So try not to get cute with longer term positions, especially. And as you start to draw in your time horizon, your trading horizon, okay, now if I'm looking to trade a week out or 2 weeks out, or if I'm looking to day trade, my mentality changes completely. So yes, Monday, I think we're going to see a little bit of a pause. I think a lot of the reciprocal tariff news probably is priced into the market right now because everybody's in wait and see mode. But again, it's global economic activity that is the real big problem. And I'm hoping that credit issues don't start to surface. And we've seen bond yields stay very, very high. So TLT, we can see that it has been in a pretty steady decline recently, breaking the 50-day and the 100-day moving average. It popped up a little bit, but the point here is that interest rates are going to stay elevated for quite a while. We have some other problems on the interest rate front, which is that the Fed has to roll about $9 trillion worth of debt this year. That's a big number. And what happens when you've got a lot of supply that you have to sell? It depresses the price. And so when the price goes down, bond yields go up. They stay elevated. That is weighing on consumption big time. And so that's not going to go away very easily at all. And so you've got rising interest rates, falling economic activity. The Fed even told us this, and that's known as stagflation. That is not a good backdrop for the market, and that is why we are seeing a lot of risk off. You also have Japan, who's not real happy with U.S. tariffs. They may not be quite as interested in buying U.S. bonds, just in retaliation. It's another way that they can protest. China has been unloading our debt for the last year and a half. They've got their own problems. They need to generate cash. Certainly, they're not going to be big fans of holding our debt either, since we're imposing tariffs. So what does that do? It takes out a couple of really big players from our bond market. Plus, we had Moody's that came out last week, and Moody's said, hey, you know, we downgraded U.S. debt last year, and conditions actually look much worse now than they did a year ago. Well, what does that mean? That means that they could downgrade U.S. debt sometime this year. Again, putting upward pressure on interest rates. So this is a bunch of fundamental mumbo jumbo that you don't really even need to worry about. Just know that the fundamental backdrop does align with lower prices. If you just look at what institutions are doing, and if you just follow the price action, price is truth. Don't trade what you think, trade what you see. And that's what we do. So I believe that we could see a little reprieve in here. I hope we get a bounce. I hope we get a nice bounce on Monday morning. I don't think we will. But if we do, that is my best scenario, because I am going to play whack-a-mole with it as soon as that wimpy little bounce rolls over and shows me that resistance is there and shows me that sellers are back. I'm going to be joining them, because I'm going to be joining the longer term tailwind. And I got that market impetus pushing the stock lower. So now I just have to find a stock that actually looks weak. So that's what I'm going to be doing in just a second here. That's the backdrop. If you're day trading, you're short term anyway. I mean, what am I going to tell you? I teach you how to day trade every day in the chat room. So I've just told you that on a day trading basis, The pattern I'm most interested in is a nice wimpy rally to start the day on Monday. I hope we rally 20 or 30 S&P points when that bounce stalls out. And I'd like to kind of preserve the low right here, which is 558. I can draw a line across. So we retrace into this long red candle. We get about a quarter of the way there, and then the market starts to roll over. I'm good with that. I'm even good with checking the halfway point of this long red candle here. So that puts us right in the middle of that range. You can figure out where that is. Yeah, I'd like to see that preserved over the next couple of days or so, because that tells me that sellers are still aggressive. They're not letting this thing get very high, because any bounce they see is an opportunity to reduce risk. What would be a scenario that I would not like to see on Monday? Well, I want to add to my short positions. I've got short positions on, so of course, if the market falls pretty far, pretty fast on Monday, I'm not going to chase that move. Okay, I'll let my short positions do what they're doing. I'm going to be patiently waiting for a bounce. So I would not like to see a big pullback Monday morning, because that's going to put me in wait and see mode. Okay, that's just, I'm not going to chase after a big drop like this on a very short term. Very short term. Again, super important that you get the context. I'm talking about short-term trades now. Your longer-term swings, you want to short, you want to add to those shorts. So you get a market breakdown in here, you can still add to a longer-term swing position, because we're going to at least take out this horizontal low. And if we start attacking it very soon, it's probably not going to hold. And that low is going to crack very, very easily. And you don't want to miss that move. So day trading basis, I don't want to see a big sell-off on Monday morning, because I don't want to chase that move. If I had some bearish, very bearish short-term 1 day, 2 day, 3 day trades, and I get a big gap down on Monday, I'd probably be tempted with those, because they're shorter term trades, to take profits and then to look for some kind of wimpy little bounce where I can go back in and reload. So that's the difference between day traders and swing traders. You know, when I said, what now? Now what do we do? It depends. It depends not on what your market forecast is, because we should be super, super bearish right now. But what we do now is dependent upon our trade duration. So before you even click the sell button, you better know what your trade duration is. And if you take longer term trades, then you have to be willing to ride out a few of these little wiggles and jiggles and retracements and bounces. You've got to be able to weather that. You're never going to pick the perfect entry. So you just want to gradually scale into your short positions with the notion that we're going to continue to head lower. As you start narrowing that trade duration, yes, now you're more nimble. You're in, you're out. Now what am I looking for? What do I want the market to do? You've got to know that before the market opens. And let's take a quick look at a 5-minute chart here. And so here we get this big sell-off on Wednesday, and the market gaps down. This is when I told short-term trading members in the chat room, day traders, very short-term swing traders, don't chase this drop. Okay? Not after a big down move like that. We need a wimpy bounce. There's our wimpy bounce. Mixed overlapping candles. Resistance, resistance. Got kind of a little double high in here, right in there. Okay, this is where I can take short positions. Well, how did you know the market was going to roll over here? And how did you know the market wasn't going to keep rallying from this point on? You already had kind of a nice rally. How did I know? Because the market just got rejected from the 200-day moving average. I got smacked down. I haven't seen rejection like that since prom night. Look at this. Barely gets through the 200-day moving average. Whap! That's how I knew that this was going to be a good entry point for shorts. And yes, then the market sold off. Here, You've got a doji from the previous day. You had massive selling and the market couldn't even get off the deck. It closed pretty much where we closed on Wednesday. So you get a little bit of a gap down on Friday, one long green candle to try and come in and fill the gap. Whap! Not having it. We take out the low, and you can go back and watch all of my analysis from Friday. This is exactly what I explained. So let's get to it. Let's find another good short position. I'm going to be looking for a short that will work on a day trading basis as well as a swing trading basis. So you're going to have to structure the trade according to your time horizon. I'm going to go into Pop Bear, which is one of my favorite swing trading searches. There you're going to see Lululemon. Let's take a look at Lululemon. I like Lululemon as a short. Beautiful stuff here. There's your flagpole. There's your little rally. There's your earnings announcement. Wham! It fell right through the 200-day moving average. It fell through this longer term upward sloping trend line. That's a low plus, and it closed near its low of the day. Yes, Lululemon is a really good short. It's going to continue to go down. It could be my short pick, but I'm going to continue to go down the list. Coin, nice stuff. Horizontal breakdown in here. It's not as weak as some of the stocks that I've seen, so it's not going to be my best pick, and you can see that in the choppy little price action in here. It's been pretty stubborn, okay? So yes, it's falling. Yes, it's broken technical support, but it's not that weak. PayPal, flagpole, horizontal support. Yeah, PayPal actually looks quite good on the short side. I like this. These are our automated trend lines, by the way. So yeah, I do like PayPal. I like this breakdown here. Let's take a look at the 5-minute chart. Nice, steady selling on decent volume. So yes, that looks good also. Let me add one oval and we'll do that. I'm going to look at HIMS. That also looks really good. And let's zoom in on this. Stock opens near its high of the day and never has a bounce. Heavy volume, D1 chart. Oh yeah. This has been a nice little sell-off here. Had a nice little run higher on good volume. And now all of a sudden we've got the market selling off and breaking this 200-day moving average. It has a clear path. It broke the 100-day moving average. It has a clear path down to the 200-day moving average, which is about $3. So it's currently at about $29, and you can see $26 is the 200-day moving average. So yes, I like it. It's not too far out of the gate. What does that mean? It means that we're not shorting a stock that's been in a huge free fall, and we've got plenty of room down to that 200-day moving average. So I'm going to have to make a pick, and I'm going to have to decide. DKNG, this is a nice little compression breakdown, but it's a fairly stubborn kind of choppy stock. So I'm going to have to make a decision here. I like that HIMS short. I do like this one. And I like the Lululemon short too. I like the fact that this stock really cracked down. It just fell hard and it sat all day. So yeah, I'm looking through some follow-through selling on Lululemon. I am going to have that be. This is going to be your bearish pick of the day. Here's the price action that I will want to see from Lululemon. Okay? Scenario analysis. What do I expect the market to do? What's the most likely thing that can happen? I don't know how the futures are going to come out Sunday evening. I have no friggin' clue. Okay? So, yes, I'm going to go under the premise that after a big drop like this, we get a wimpy little overnight bounce Monday morning. If we get that, I want to see mixed overlapping candles on light volume. This is not the worst, but even something more stubborn with more red candles in here that just can't quite get into this range. So maybe we get back to 561 on SPY, but it's an effort. It is really, really tough Monday morning for us to get back to that 561 level. If I see that type of wimpy bounce, what do I want to see Lululemon do? Nothing. I want to see it struggle. I don't even want to see it above VWAP. I want to see it struggle, because as soon as the market starts to roll over, then I'm expecting Lululemon to take out this low from Friday and to stage another leg lower on lowered guidance for the rest of the year. This is going to be a good pick. Blood has been drawn. The stock has dropped below the 200-day moving average. It's dropped below this upward sloping trend line. It is below this horizontal, was support, now resistance, and that is actually the high of the day is 304 on Lululemon. See, I don't want to really have it above that point. Could it go above that point and still present a good shorting opportunity? Yes, it could. I mean, as long as it doesn't fill in a lot of this gap, I want to see that sellers are motivated. Again, motivated. If they are motivated, any rally is going to be hit with resistance because they want to get out of this stock. And that's how I know that if it can't bounce very much, that another leg lower is pending, and I have that market tailwind. I hope that all this information is going to help you structure your trades. You've got to know what you want to see. You have to know what is most likely to happen, and you have to know which scenarios favor you. Where are those highest odds? And then you watch for that pattern, and you're not simply reacting to what's happening. You've got a game plan. You found your stocks that are super weak, and when the market puts in that wimpy little bounce on Monday morning, and when the stocks that you're interested in shorting can't get off the deck, then you know your short is setting up, and you're ready to take action on it. That's how this works. That's how you stay proactive. And then as the market starts to roll over, hey, that was really a wimpy bounce. Hey, we are seeing sellers come back in. Hey, Lululemon, I got some of my short on. That stock's starting to crumble. I'm going to add to it because now the market's starting to finally roll over, take another leg lower, and so is the stock. Confirmation, confirmation, confirmation. That's how you build positions. That's how you ride positions. Stay short. That's what you should be doing now. What now? There should be no question. We've been waiting for this. We finally got the pattern. Ride out a couple of wiggle and jiggles, a couple of failed attempts to bounce, and stay on the short side because, folks, we're heading lower. I hate to say it, and I do hate trading the short side for one reason only. I make a lot of money shorting, but I don't like it when people are distressed. So at least if you're profitable on your short positions, it helps to ease some of the pain, and the market's going to go where the market's going to go anyway. Thanks so much for watching, everyone. Please subscribe to my YouTube channel. Because of everything that you've been doing recently, yes, my channel's starting to gain some traction, and I'm reaching lots of new traders, and that is my ultimate goal. So as long as you guys keep doing that, I'm going to try and get more videos out, and I'll try and do some short ones. I'm even contemplating a very quick 2-minute pre-open short that gives you the best scenario each morning that you should be watching for a short-term trading perspective, day trading perspective. Trade well, Look for more downside this week. Lots of economic news. We will see you through the course of the week because I will be doing some of those videos. Thanks so much for watching.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.